welcome to Morning Trade with Moneycontrol in association with M Stock by Mirae Asset. I'm Sumera Abdi and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends and most importantly, your queries answered live during the course of the show. So keep commenting on our live feed and we'll pick up your queries in just a bit. But before that, let's take a look at what the global handover looks like this morning. It's a positive Thursday on Wall Street and in the US. Wall Street ended Thursday's trading session higher with the Dow Jones gaining over 1%, the S&P 500 surging over 1.5% and the tech-heavy Nasdaq Composite, the day's outperformer, closing with gains of over 2%. The yield on the benchmark 10-year Treasury note rose 9 basis points to well past that crucial 3% mark. And also the June employment report, which is due later today, is expected to show another month of strong hiring as the labor market bucks any signs of an impending recession or economic slowdown. Economists expect that the U.S. economy would have added 250,000 jobs last month and the unemployment rate is seen remaining flat at 3.6%. Ahead of this data release, Asian markets too trend higher, led by the Japanese Nikkei. The SGX Nifty too signals a positive start. And also, let's focus a bit on Europe this morning. In the UK, Boris Johnson has resigned as the Prime Minister after over 60 ministers and government officials quit the government in the last 2 days. Johnson said that he will continue to serve as the PM until the party chooses his successor. All right, so those are all the global headlines. Let's now put the spotlight on the Indian market and the stocks which are likely to be in focus today. Hemen Kapadia of KR Choksey Securities joins in. Hemen, morning to you. First up, a word on the market itself, because, you know, we're wrapping up a pretty good week, right? We've seen gains on our market, I think, almost 3% on the Nifty. For today, what would be your index strategy?
Hi, a very good morning to you. Good morning to you, Sumera. Thank you for having me. Frankly speaking, I don't think the markets are completely out of the woods yet, Sumera. So I believe there could be a gap up opening. And if there's a gap up opening, I wouldn't chase it, honestly. But yeah, post the gap up, if there is some resistance, there is, Sumera, 3 weeks back, to the bearish gap between 16,172 and 15,886. Now we've almost covered the gap up yesterday, but not completely. And we also had the 55-day exponential moving average coming in just around 16,200. So I believe that would be a point of resistance today. So frankly speaking, I would avoid a trade on the Nifty, especially if there's a gap up opening. Post the gap up opening, either today or on Monday, if I get the Nifty around 16,000, then I would be more comfortable going long, because once again, I don't think this is a market where I want to chase in case a gap up comes up. So many.
Okay. Hemen, probably one of the stocks of the day is going to be M&M. They have signed a massive JV with British International Investment, I think, to invest up to 1925 crores in their new, four-wheeler passenger electric vehicle company that they're going to be setting up. Technically, how is this stock positioned, and what would be your target on the upside?
Well, frankly speaking, Sumera, Mahindra & Mahindra gave a breakout, upward breakout at around 980. That was last month. That was the highest ever weekly and monthly closing for M&M ever. And it's one of the few stocks, Sumera, that has posted a fresh all-time high in a extremely wobbly and unstable market. So a lot of relative strength coming in. I mean, you have auto stock which is posting a fresh all-time high. So outlook remains positive. If you're looking a target in terms of an upside, I would say a target of 1200 and 1280. But this would not be a very short-term target, would be more of a positional target. And since we are at an all-time high, Sumera, there aren't any known resistance levels. But yeah, we remain in a short, medium and long-term uptrend on all time frames.
Okay, so since we're talking about the auto pack, what about Tata Motors? Because here, fundamentally, the news is that they have given out a weak Q1 business update that has just come in, and their sales in the Q1, they say, remain constrained because of the China lockdown. You see some pressure on this stock?
Well, there has been a little bit of a hint of an underperformance, Sumera. 1, 2, 3, 4, 5, 6, 7. Okay, this is probably the 9th or the 10th month that Tata Motors is corrective, and I think there's a dichotomy. If you see, Hemen, we just spoke, Sumera, is at an all-time high, and Tata Motors is nowhere close to its all-time high, and for the 9th to the 10th month, it's still corrective. Having said that, I don't think it is in a mode to go down much. Could take a small breather, but the weekly picture is stabilizing. Downside appears limited. I believe there is a base formation in place in terms of levels. If 400 holds, we are at 430. If 400 holds, I would be comfortable. In the close above 440 should take it to 468 and more. Once again, this is dependent on the market also. I don't think it has the wherewithal to outperform standalone. Sumera.
Okay, Hemen, we have some queries which are coming in from our viewers. So the first one comes in on Tube Investments. Vinay Nayak wants to know, what is your view?
Well, Tube Investments, once again, one of the few stocks which have shown amazing strength and alacrity. Sumera, all-time high in a market like this. So, firstly, we remain in a uptrend on all time frames, short, medium, long term. There was a trading range between 1450 and 2000 for the last 6 months, and now there's the 7th month where it's poking its head above and out of this trading range. So assumption is that today's Friday, so the weekly charts would also form. If these levels hold till the end of the day, or we close about 2020, one, that would mean a valid breakout, and two, could also mean that we would open the doors for an upside, possibly to 2400 in the next 3 to 4 months.
Okay, Hemen, two pharma stocks. One is Alkem and Dr. Reddys. Now, both of them have had observations coming in from the US FDA. Alkem has received one observation to their Indore manufacturing unit, and Dr. Reddys has received 2 observations to their formulation unit in Srikakulam. Technically, how would both stocks look to you?
Well, if you're talking about Dr. Reddys, range bound, but I don't see too much of a negative bias. I mean, most of the pharma stocks have been floundering, so not much to look at. 5 months, it's a large range, but 5 months, we don't seem to have made too much of headway. Yeah, if it closes above, I believe 44.50 Sumera, I think then it would be extremely interesting, and we could see some more upside. I'm sorry, I don't track Alkem.
Fair enough. Okay, the next question is on IT. Trilok wants to know, what's your view on Infosys? And of course, today is the day that TCS kicks off the earnings season as well. So post market hours, TCS will be reporting their earnings. So Hemen, first on Infosys itself, and then on TCS, or anything that looks attractive to you in the IT pack.
Well, frankly speaking, the IT stocks have come off sharply. They have taken support on medium-term charts. I wouldn't like to second guess the results. Last time after the results, Infi tanked big time, Sumera. So as of now, we are looking at a recovery, not a rally. If Infi comes up from approximately 1950 to a low of 1365 or something, I think that's pretty significant for a blue chip like Infosys. So yeah, simply put, short term, a bottom has been made. We are in the process of a medium-term base formation. 1550, I believe, is a level to watch out for. It closes up at 1550. Yes, we see an upside. There is a very long and big bearish gap which is open between 1740 and 1650 somewhere. So somewhere that could be a cover-up if the results are decent. Coming back to TCS looks a bit better. Extreme short term, it looks like bouncing. In the near term, a close about 3360 would trigger off an upside. So we've taken supports, assuming the results are not too shaky. We see some sort of a upside coming in. Sustainability remains suspect.
Okay, what about the metal pack and, in particular, say Vedanta? Here, there is news that they have acquired the Athena Chhattisgarh power for about 565 crores. Technically, how's the stock looking, or anything that you favor here?
Internationally, copper seems to have posted a bottom the day before Sumera. So and I think the Chinese announcement has seen metals galvanize yesterday. I believe short covering or otherwise, there would be an upside coming in metal stocks, coming back specifically to Vedanta, support at 205, needs to close about 235. Worst seems to be over on the shorter term charts. Medium term charts, 440 to 206. It's become half, and I guess that's the case with many metal stocks. So, one, short term bottom made. Two, uh, deeply oversold on the weekly charts. So, Vedanta and metals as a whole look like bouncing back.
All right, Hemen, stay on. We'll come back to you in just a bit for your own stocks and, of course, to answer some more viewers' queries. For the moment, let's focus on the fundamentals of the market. Parthiv Shah, Director of Tracom Stockbrokers, joins in. Hi, Parthiv. Good to see you in this morning. This week has, of course, been very good. But how would you rate your own conviction to buy stocks today versus, say, a year ago?
Good morning, Sumera, and thank you for having me on your show. Absolutely, Sumera, great question. And today the conviction is lot higher as compared to a year ago. Simply, first, let's talk about the valuations. Especially after what we've seen in Nifty in terms of almost 18% correction from the peak. And same is the case with the mid-cap indices or the small-cap indices and the broader market. If I were to see, a lot of stocks have corrected by more than 20 to 40%. This is a kind of a very brutal correction. And historically, this is not something rare. It has happened multiple times over the past. And the analysis shows that whenever such corrections have happened, and on such corrections if investors were to park money, the next 2 to 3 years have been very richly rewarding. So I think I'm very convinced that we are in a long-term bull market. Yes, there are some headwinds in terms of inflationary pressures, which luckily now we are witnessing it's coming down. And overall, the fundamentals of our economy are extremely strong. Probably India would be one of the fastest growing markets. So there's no reason that investors should shy away from these markets. Just seeing the correction, which is the past, definitely long-term outlook looks extremely appealing to us.
Okay. Parthiv, what are your expectations from TCS this evening? Of course, the result comes out, post market hours. So we'll see the market reaction only on Monday. But what do you expect? And for IT as a whole, what is your outlook?
See, Sumera, I would expect very resilient numbers from TCS. In terms of if you were to define by constant currency revenue growth, I think I would be happy to see anywhere between 3.5% to 4%. Anything above 3.5% would be a very positive surprise. No doubt, when we see the numbers from the dollar revenue growth, it comes to somewhere around 1.5 to 1.7%. The reason being almost 45% of TCS's revenue comes outside of US, whether it's the European markets or the UK markets, where we had seen the cross-currency headwinds taking a role. But nonetheless, I think the core commentary since last many quarters has been extremely strong. And even in terms of the deal wins momentum, if you see last quarter, I think quarter 4, they won almost $18.4 billion worth of deals, which is, I think, astonishing. And our sense is that, this momentum is going to stay extremely strong. And despite the fact there's a lot of chatter regarding, the recessionary pressures in US and European markets, probably we'll see a lot of client budget shifting from more of growth-oriented IT spend to more of cost optimization IT spend, which indirectly benefits a lot of Indian IT players. And also looking at the recent Accenture commentary, I believe that TCS numbers should be very resilient, except for the fact there will be some headwinds in the margins because of the wage growth, because of the travel cost. But I think these are short-term headwinds, but long-term investors don't worry about those.
Okay, a whole lot of business updates have come in for this quarter. Some good, some not so good. Anything that stood out for you? And, overall, what do you expect from Q1? I mean, what would you look out for?
See, Sumit, I think one of the numbers that we really love to highlight is Bajaj Finance. I think this is a company sitting on almost 2.06 lakh crore worth of AUM. And despite such a huge book, this could kind of really do off a lot of banks. This is an NBFC, and what we saw was a fantastic 6% quarter-on-quarter growth of AUM. Quarter one is traditionally a very strong quarter, and what we like is that how they have managed their cost. Despite the rising yield environment, the costs have been managed extremely well. So we're very confident that the spread should be intact. And more importantly, I think the commentary is now changing. Now we are kind of out of this COVID issues, and companies like Bajaj Finance, where in the consumer finance division, I think they've been doing extremely well. And I think this is one company which can raise funds at substantially lower cost. So here we are very upbeat. We saw very good commentary from Titan. I think it was a very, very positive surprise. One was not really expecting such good numbers from Titan in terms of what they have guided for. And also, I think going ahead, FY23 looks extremely strong in terms of all the divisions, whether you talk of jewelry, eyewear, watches. They are doing a lot of great stuff in the online business segment, which is very appealing. And also what we heard from Marico, I think in terms of the inflationary pressures coming down, no doubt the volume growth is still not what the street would like for. But this is a good commentary overall for even the FMCG sector. So these are the three stocks in the Q1 space where we felt the highlight was pretty good. And overall, in terms of the Q1 numbers, we'll be very upbeat on the auto numbers, the capital goods, engineering numbers. And also the cement volume growth is something that we are eyeing in Q1. But overall, we believe Q1 should be a very resilient quarter.
All right, that's good to know. By the way, Parthiv, this rupee has a lot of people worried. Now, whether it is rupee weakness or dollar strength doesn't really matter, right? Because the impact is still there. Now, Goldman Sachs says that they see rupee topping 81 against the dollar by the end of the year. What kind of stocks or sectors would be especially vulnerable to this kind of a move?
See, Sumer, I think this rupee depreciating is a pretty normal phenomena where we have seen globally, even the likes of euro and the pound also getting depreciated. Even the Japanese yen is depreciated big time against the US dollar. And this has been the phenomena historically when we have seen when the US Fed is hiking rates, we see the dollar tending to become a little stronger. Vis-a-vis that, despite the inflationary differential, the rupee has held on extremely strong, I would say very resilient currency so far. But yes, I think there'll be a lot of companies where they have a lot of import component, and that import component is their raw material import component, which tends to get a little more expensive when the rupee depreciates. But again, I think overall, I feel that with the rupee depreciating, some sectors, especially like chemicals, where they have big component of import, a lot of pharma and pharma related API, because a lot of intermediates for the APIs are being imported, so it's in dollar terms, which really impacts their margins. So besides these sectors, I don't see a reason where a lot of sectors would get affected because of the depreciating rupee.
Okay, one final question, Parthiv, is that, we've been speaking to a lot of experts over the days, and the opinion seems to be that, continue to look at quality companies. Now, large caps is already a crowded trade, right? Everybody is getting in. There is limited scope for alpha generation. So what would be a good time for investors to start looking at mid and small caps? I mean, that's where you'd get the major opportunity, right?
Absolutely, Sumera. Very great, very good question. And I think the reason I was talking about the valuation call, it's extremely important for investors to monitor the valuations, especially in a small and a mid-cap space, because generally these are very volatile segments and no doubt very rewarding as well. But currently, I think looking at the setup of the market, I think the mid and the small caps have also been battered down. Even if I were to look at a small cap index, which is like Nifty Small Cap 100 Index, I think it's quoting it around 15 times forward, which is, I think, historically, it's never been so cheap. And generally, we tend to see it at around 22, 23 times. So I think this is a great opportunity for some sort of alpha generation for investors. But Sumer, I'm very vocal in terms of asset allocation. And I have a very simple rule, depending upon the time tenure, because yes, we generally talk about somebody's age, but depending on the time tenure, which is 5 years, 10 years, 15 years, if somebody has a 5-year view, have 75% allocation in large caps, rest in mid cap, small cap. If somebody has a 10-year view, change that to 65% large cap and rest in small and mid cap. And if somebody has a 15-year view, then that should be 55% large cap and rest into small and mid cap. I think this allocation is extremely important for proper alpha generation at different age and different time spans.
Yeah, absolutely. Asset allocation is like the holy grail, right? Parthiv, thank you very much for your time this morning, and thanks very much for speaking with us. Hemen Kapadia of KR Choksey Securities is still with us. Hi, Hemen. Thanks for waiting by. We have another query that's come in on Shri Renuka Sugar. Hiren Joshi wants to know what's your view on this stock and, maybe any other sugar stock that you track.
Normally, Sumera, Balrampur Chini, the big daddy, leads the sugar sector either up or down. Currently, it's corrective after a humongous bull run. I believe it's going to remain corrective for the next few months. Now, coming back to Renuka Sugar, sub 5. So it has moved up from probably 3 or 4 to a high of 63.20 Sumera. And now we walked into a correction of a greater degree. There is some relative strength going on, as despite 3 months and the 4th month of a correction, we remain in a range between 40 on the downside, 63 on the upside. So it doesn't look bad, but doesn't look particularly fetching also. The bigger picture remains sanguine and solid. So one can say that we are in a longer term uptrend. We walked into a correction. It could take some time to play out. If 40 breaks in terms of closing on the weekly chart in the meantime, Sumera, I think there could be a deeper correction. But it's a sideways movement, doesn't seem to be going nowhere in a hurry.
Okay. And a final question on Varun Beverages comes in from Sasidhar. He wants to know your view and, possibly the target that you have.
Okay, another stock which is at an all-time high, and now adjusting for bonuses, the stock prices have changed. So we're still at an all-time high. No known resistance level, but if I were to use some projections, Sumera, I believe we should be heading towards 880 and 940 as far as Varun Beverages is concerned. Just one caveat: 780 needs to hold end of the closing on the weekly chart for the aforesaid upsides to unfold. Sumera.
Okay, and Hemen, finally, what are your hot stocks for today? What have you chosen?
Yeah, I've chosen 2 positional stocks, Sumera. Firstly, I have a buy call on Atul Limited. We've closed at around 8,200, so conditional buy at around 8,175. Stop loss 7,975, target of 8,575. It's formed a rounding bottom. Mechanical indicators have given a crossover buy after reflecting positive divergence. Stocks looks set for a bounce. The second one is a buy call on India Cements. Cement as a sector, we don't have a cement index, but cement as a sector, at least in the short to medium term, seems to have turned positive, whether it's Dalmia or Ultratech or JK Cement. I believe India Cement would play catch up. We closed at around 165. One can buy India Cement at around 165 with a stop loss of 159, target 177. Higher tops, higher bottoms, crossover buys by the mechanical indicators after positive divergence. So we're looking for a bounce, Sumera, in this case.
All right, Hemen, thanks. Have a good trading session. Thanks very much for joining in. By the way, we're going to wrap up, but there is news for especially those who are living in Maharashtra. Heavy spells of rain continue, and the Indian Met Department has issued a red alert today for Mumbai, Thane, Palghar, Raigad, Sindhudurg, Ratnagiri, Pune, Kolhapur and Satara. Specifically for Mumbai, expect heavy to very heavy rainfall, which is likely at a few places, and extremely heavy rainfall at isolated places. There's also a possibility of occasional strong winds reaching up to 40 to 50 kilometers an hour, and a high tide warning has been issued for about 6:20 this evening. So stay safe out there, and I hope you're taking every precaution. That's all we have on this edition of Morning Trade. Do stay tuned. Markets with Sandro and CJ is up next.